Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a good day today, and hopefully you guys wrapped up a beautiful trading week in the markets as well. And in today's action, guys, the SPY and the QQQs both hitting brand new record all-time highs after two fairly bullish pieces of news for the markets, at least, came out early this morning. Number one, of course, was the jobs report, and there was a lot of timidness coming into this one, especially after the weaker than expected ADP private jobs report came out yesterday. The official one from today, Bureau of Labor and Statistics, absolutely smashed the expectations, 147,000 new jobs added to the economy. In other news today, of course, that was also bullish for the markets. We had one major tax bill come into play, which of course was the big beautiful bill. We call it the tax bill because most of the benefits indeed were in terms of tax cut extensions stemming from 2017 that were now extended with a couple little more twists. So in today's video, guys, we're going to do a few things together. Number one, we're going to take care of those two pieces of news. Number one, go over the jobs report very briefly, see the positive effects that it had on the market. And thereafter, number two, of course, do a quick little summary of everything that happened in terms of the big beautiful bill. What are the main components of the bill and how can it possibly affect the markets in either direction? Thereafter, we will take a look at our technical analysis portion of the video and do a full breakdown of the SPY, the QQQ, and all minor sectors, see how the rotation is shaping up. Thereafter, take a look at our big tech name list as well. Do the same thing. Take a look at big tech, see how they are shaping up. Are some good for swing trades? Are some still good for long-term portfolio buys? Thereafter, we'll do our classic biggest gainers and losers of the week, or rather of the day. Take a look at some of the names that ran the most over the course of the day and some of the names that declined the most as well. And to wrap it all off, I'll do a quick recap summary of the trading portfolio. What trades were we able to make this week? Did we make some profits? Well, the quick answer is yes. Another very beautiful week for us in the markets. Then just take a look at which positions I opened for next week and which positions I'm keeping into next week that I've already had. That's going to be pretty much it for today, guys. So it should be a fairly fun video. Let's jump right into it, shall we? Now, moving into the SPY, up 0.79, the Q's up 0.98. Very good day of overall performance and another good day of broad market rotation. Take a look at the rotation right here. You can see that. Well, I have it on the year to date. We're going to do that after, but on the one-day relative performance, guys, many names in the green, a lot more in the green than in the red, of course. Big tech had a very good day. Semiconductors continuing on their march forward. The financial sector actually performing well. A lot of the insurance companies that were down yesterday recovered most of those losses today. Healthcare also coming back, and the bottom half of the market not reacting too poorly either. On the 1 year relative, guys, now that we are through 6 months of the year, what are some of the major biggest winners and losers, of course, during that time period? We can clearly see that Microsoft, Oracle, Palantir, and part of software, CrowdStrike, special shout out to them. Semiconductors have been doing well. Certain components of software, such as Uber and Intuit, have been performing very well as well. And Meta, but some names have been lagging behind. And in the second half of the year, now that we still have some fairly bullish macro environments ahead of us, I want to be focusing specifically on some names that have been left behind, but maybe should not have been left behind so far. Apple, Amazon, Google, special shout out to Tesla there as well. Consumer defensives, year-to-date gains, we can see Walmart and Costco putting in 8% and 7% respectively, but there's a few names here, namely Pepsi, that has also been left behind. Financials, not a bad year. Credit cards performing well, the banks performing even better, but some big names such as Berkshire, somewhat lagging or in line with the performance of the SPY. Usually they are outperformers. Healthcare, of course, is a very mixed bag. There's tons of talk to talk about there. We talk about it often, but of course, UNH, one of the major laggards there. And the bottom half of the market, although we can see some names with decent gains, other names such as UPS still down 17% year to date, and many more to speak of overall, guys. You know, even some data center plays buried down there. Equinix, one of the, well, actually the largest data center tenant, or rather, landlord in the entire on the entire planet right now, down 16% year to date. So there are still some fantastic opportunities in every segment of the market, provided that you understand where to look. Keeping an eye on the one-day relative performance here, you can see that even better to where we had a beautiful day of rotation led by technology and financials. Energy roughly flat on the day, and healthcare not the biggest day, but it was in the green. 1 week relative with our indexes blasting towards new all-time highs. Everything performing very well. Even basic materials and industrials having a very good week, led after that by technology, to the downside, utilities, and healthcare overall, but very decent. And on the 1 month relative, we took a look at the monthly candle closes earlier on the Tuesday session, and we had realized that there were very bullish candle closes in pretty much all sectors, which could lead us into some positive seasonality. I'll remind you, the July session for the markets is usually one of the most bullish seasons of all the entire year, only followed up by, or rather only bested by the month of November. July is actually number 2 in terms of overall percentage gains for the year. So now that we're through a very crucial jobs report, and that we also know that into next week, I'll just show you guys into next week, right? Next week, there's really not that much data, and we do not start earnings either. Well, we may just have a smooth sailing week next week, especially with the details of the big, beautiful bill being passed as well. So next week might just be a coasting week where we could see the markets appreciate further and further and broaden out a little bit more. Now, speaking about those 2 news releases, of course, we have to talk about the jobs. And referencing those jobs, as a matter of fact, we'll take a look at this week just to give you guys the absolute numbers in terms of the non-farm payrolls. The expectations were for 110,000. We came in at 147,000 jobs. Unemployment rate was supposed to be 4.3. We came in at 4.1. Everything very, very solid. And that's after a less than stellar ADP private jobs report that came in yesterday. And we were also noticing in yesterday's video the clear divergence between the 2 reports when they come out on a month-over-month basis. Now, let's take a look at a few headlines here. Not only did we increase by 147,000 this month, we also revised the May numbers up to 144,000. That was up 11,000 on the revision estimate. Now, we obviously know that monthly job creation in the US has been coming steadily down since 2022, but that's for a few key reasons, guys. Number one, companies have gotten a lot more efficient due to advancements in AI. We can see that from big tech layoffs that have been happening all throughout the year, whether it's Google, whether it's Meta, whether it's Microsoft, whether it's Oracle. Many companies choosing to let go a lot of the workforce, well, not a lot, but a portion of the workforce that they hired in 2022. So although these numbers were staggering, it also leads to an argument that perhaps a lot of companies overhired back then. I'll remind you, this is when supply chains were broken as well. There possibly was some overhiring back there, and now the jobs market is somewhat normalizing, but we can see somewhat of a downward trend and a weakening of the trend overall, but still the unemployment rate stays at a healthy level of 4.1%. The labor force participation rate, a few people were talking about this today, dropped to 62.3%, its lowest level since late 2022. That line right there may lead you to think that there might be reason to panic. However, I'll remind you guys, the long-term, from 1948 till 2025, the long-term labor force participation rate is 62.83%, and there's a secular trend at hand here to where from the year 2000 towards today, labor participation has gotten weaker and weaker and weaker and weaker. Not to give you guys a class on economics, that's not the point, but the reason that this has been happening is the aging of the population overall. So keep that in mind. Whether you measure, though, the unemployment rate or also a more extended unemployment rate, which also encompasses people that are discouraged from rejoining the labor force for various reasons, either not being able to find work or moving from part-time to try to find full-time, and they've just been out of work for a while. A lot of people look at this number. We can see that from June 2024, it was 7.4. It upticked this year to 8% in February 2025, but now has also been following the trend to the downside. So unemployment still doesn't remain a problem. Now, the jobs market, as viewed by the Fed and viewed by many analysts, the jobs market is as follows right now, guys, right? Companies are not necessarily laying off people by the masses because they view that there is an economic downturn possibly on the horizon. They're not laying off people by the masses. Companies that have gotten more efficient in the last few years are laying off people that they don't need, the excess labor in terms of them, to raise profit margins, of course. Reference corporate greed, if you want to call it that, something like that, right? But also, in terms of hiring, right, we're also not seeing a very rapid pace of hiring. And you must understand that if you're looking for work and you are a professional, you have a degree, you've noticed that in the last 2 years, it's been a lot harder to find a professional job, right, especially white-collar work, as opposed to where it was in 2022, because companies are simply just not hiring at the same velocity as they were. But we do not have to say that that is a negative element, right? The economy moves in cycles overall. So let's take a look at the piece of news number 2. That's everything we had for the jobs report. You'd be very hard pressed, guys, to find anything wrong with this jobs report. However, the one thing that it did do is, well, the Fed the Fed is probably not going to cut. The probabilities for an interest rate cut for July went from 24% yesterday down to about 4% today. So probably no cut in terms of interest rates coming in July, but people are still penciling in a possibility for the month of September. That's everything we had to cover for the labor market. Now let's jump into the Trump beautiful bill, right? So these are the key changes to what was going to happen right now. We have a lot of money obviously being spent by the government, almost $4 trillion over the next 4 years. Tax cut extensions from 2017 plus a few others are now at $4.5 trillion. That's going to be the net impact. Defense budget also $150 billion extra new dollars and $130 billion to secure the borders. Now, where did they cut? Well, a lot of cut was almost $1 trillion in Medicaid. We also had $500 billion in cuts in green energy, namely a lot of the EV tax credits, the $7,500 tax credits, and other EV and other green energy plans, and infrastructure plans, and food stamps, $287 billion of cuts there. Now, obviously, all of this is not enough to make up for the massive amounts of tax extensions, but that is the breakdown of the bill. We're not going to sit here and play politics. I'm just here to present you with the data and how it could possibly impact the markets. And believe me, the tax cuts are probably going to be a net positive for the markets over the next 3-4 years overall. Now, we can take a look at some of the major changes right here in terms of what are the tax implications, right? The individual tax changes. And there's a lot of them to be specific, right? We're going to go through them very briefly. So standard deductions have been increased for single people by about $750 and by about $1,500 for married joint filing. That's a decent uptick in the deductions. Bonus deductions for older adults. It used to be $1,600 for age 65 and older. This is all for seniors, by the way. Now it's $7,600. So Trump definitely fulfilling his promise that he would do something for senior citizens. That is a very nice uptick overall. In terms of the SALT, state and local tax deductions, this is a massive uptick right now. 10,000 limit was the prior. It is now 40,000 with increases by 1% through 2029, but does revert to 10,000 back in 2030. So providing a tax deduction break for a lot of people here for the next 4 or 5 years. We also have some child tax credit increases here it used to be 2,000. It's now 2,200 overall, which is pretty good. Estate and gift tax exemption. If you want to transfer some properties to your children, the exemption used to be 14 million for single and 28 million for married. It is now 15 and 30, so a little bit of an uptick there. Tax on tips, right? That was one campaign promise that Trump did run on. Now you have deductions up to $25,000 per year through 2028. No tax on overtime. Same thing. Well, it's not no tax, but there's heavy deductions up to $12,500 per taxpayer from 2025 through 2028. Auto loan interest, another thing that he said he was going to do, deducting up to $10,000 of annual interest on new loans from 2025 through 2028. We will see if those are only for American-made vehicles, which was also a campaign slogan. Trump accounts for child savings. We talked about this about a month and a half ago when they were introduced. A one-time $1,000 credit to an account per child born between 2025 and 2028. This will be indexed to the S&P 500 and invested for those people. Charitable deductions as well. There was none, and now we have $1,000 overall for single, $2,000 for married and joint filing. So a lot of different either credits or deductions coming into play here overall. And lastly, tax breaks. Got to talk about tax breaks and regulations. So this is going to be good for the markets overall, guys. Why? Well, not only for the markets, but also for the economy, right? It's just going to be more money going into the economy as opposed to going to the government in terms of taxation. So of course, some people are going to save that money in a savings account, but most people will either spend it or invest it into the markets. Other than that, we have tax deductions, permanent tax breaks for corporations that allow businesses to deduct the full cost of qualifying investments and research projects immediately rather than a number of years, right? That is very, very solid. It used to be 25 to 29 when it was trying to pass through the House. It has been revised to permanent tax breaks. That will need to be removed by Congress down the line if it is going to be changed. That is very solid overall for corporate America. Moving on lower, if we want to see what is the impact here on the average American, well, of course, we're not going to play politics here, but this has been well documented so far, right? I'm just the messenger, so don't say it to me. the lower income cohorts will be the most affected. Why? Well, we know why, obviously, right? It has to do with the the trimming of Medicaid and also the food benefits, which stand to affect the lower income demographics of the population the most. As a result, this is a bracket done by the School of Wharton, which is a very solid economic school, of course, one of the best in the country, arguably the best in the country. That being said, under 18,000 are net losers. $165 in 2027 or by 2027 and $1,300 by 2033. So under 18K, it's not benefiting you. Between 18 and 53,000, only a $30 gain in 2027, but losing 15-20 by 2033. So also debatable. However, anybody over, that's where you actually start to see the real gains. Between 53 and 96 would gain $14.30 in 2027, but lose $65 by 2033. That's because a lot of these plans are from 2025 through 2029 with possible revisions coming in 2030, of course. So you have to kind of project in the future. And as you move higher and higher in the income tax bracket, of course, the tax advantages become larger and larger, but it does start at the $53,000 tax bracket overall. So don't shoot me. I'm just the messenger. But we also know that there's a portion of, well, you know, we obviously know that the people that make the most amount of money in the economy are traditionally the people that spend the most in the economy. So once again, that should find its way to corporate America and possibly into investments as well, as we know that the wealthiest cohort of the American people are the largest investors in the markets too. So all things considered, the net impact on the stock market, I'm not here to play politics and say the impacts on the lower demographic, the middle class, the high income class. All we want to know in terms of this channel is what is going to be the net impact in the markets. And with these tax breaks, with the deregulation, further deregulation that's coming, and the permanent tax breaks for corporation, this is good for corporate America overall. The markets did indeed like this and will indeed enjoy this for the foreseeable future for the next 3-4 years throughout Trump's turn. So that is going to be a net tailwind for the markets for the next 3-4 years, in my humble opinion. Recession or not, this is definitely going to be a net positive for the markets overall. Keep in mind, I'm saying the markets, right? I'm not going to start talking about different income demographics. That's not the purpose. But for the markets, it should be quite good. Very solid jobs report too, which is why your markets are trending higher today. That's everything we had to report in terms of the news. So hopefully you guys enjoyed that. Happy 4th of July, early 4th of July for you, all of you guys that are in America, by the way. So now moving into the actual indexes in terms of technical analysis, we're going to go through these quickly, guys, because I want to get to the tail end of the video and do as many stocks as possible. Clear breakout beyond the all-time highs, right? So the bulls are in full control of this time frame right now on the daily. Any pullbacks, you guys know the drill, right? Anything above 591 looking for a higher low for possible further trend continuation. So even if we do pull back next week for some reason, a lot of support down here, 609 down to 598. Call it 610 down to 600 if you really want to. It's the prior resistance. The long-term bulls are in control of this chart. Well, the medium terms, the weekly bulls, full control of this chart right here. Weekly higher lows are set at 592. A lot of space for the pullback if they need it. And also, we took a look at the monthly candle closes. But just to reiterate, guys, this is a very bullish V-shaped breakout pattern on the monthly, and the quarterly charts just closed as well. It shows that we might just be going for a bit more continuation, especially if you don't have any more jobs concerns, at least for another month of data. And maybe the tariff effects that we talked about in yesterday's video also may not truly be felt much before the month of August. So we potentially do have a clear seasonal path for the month of July in which we can see the markets expand. So keep that in mind. The bias is right now bullish. Of course, anything can happen, but there's always a bias. And the bias right now is bullish. The QQQs right now looking very strong too. Daily uptrend formation right now. Anything above 548 on a pullback. Higher low looking for a trend continuation. In the event we roll this over and go into a daily downtrend, we will have a lot of support below us, guys. Prior all-time high resistance is now support. 537 down to 524 is that mark. The moving averages are there as well. And on the weekly time frame, we got the moving average on the weekly, the 12 EMA curling up there too. Beautiful pattern on the weekly QQQ bull chart right now. It's looking very strong. Weekly higher lows are all the way down there. So we can afford a pullback, guys. The bulls are in full control of all these charts, right? So any pullbacks, in my opinion, are for more swing trade longs and are dip opportunities for buying. Monthly candle closes were gorgeous, and the 3-month candle close once a quarter. Also, this is an extremely bullish hammer candle, guys. I would not be surprised if we do start moving higher here throughout the month of July. Moving on to financials right now. Financials up 1.08% today, looking very strong, breaking out as well to their own new respective all-time highs. Beautiful weekly candle close as well. That being said, who's in control? Should be fairly obvious, right? Daily uptrend to the bulls. Any pullback looking for a higher low. Anything above 50, let's call it, looking for a higher low for possible further trend continuation. Pullback zone 51.50 down to 50.5. Bank earnings are in the next 2 weeks. They start in 2 weeks, so keep that in mind. Beautiful accumulation, bull flag, breakout, and now the bulls have tons of space, guys. Even on a pullback, what are we looking for here? Resistance highs, breakout, retest, and possibly run. Monthly time frame was gorgeous as well, looking good for some V-shaped continuation right there. Bulls in full control, and the quarterly bulls are in full control too. So the bulls control every single time frame. Every single time frame. If we do not receive very, very negative macro news, it's not going to matter. Well, last week, we got some news about Canada. The markets completely discounted that and moved higher. This was on the Thursday session last week. We discounted it. We moved higher. Iran, Israel was a thing for about 2 weeks. Discounted, moving higher. Yesterday, the news about Vietnam, which the tariffs weren't even that favorable, in terms of they're high. It is going to result in price increases to the consumer. And we saw the statistics of that yesterday already happening. The markets did not care. It's going to take something big. It's going to take jobs unraveling. It's going to take GDP unraveling, or it's going to take significant upticks in inflation to derail the market at this current stage. So now you know the catalyst to look out for. So the bias is bullish until either jobs come in very bad or until inflation either comes in very bad as well. Other than that, we move onwards and higher. Moving on to XLV right now. Healthcare is looking not too bad. Daily uptrend right now, looking for a higher low. Anything above 133.72. Looking to continue the pattern. In my opinion, the clearest time frame for healthcare right now is the weekly. We are trying to set the weekly uptrend. Not quite doing it just yet, but we know the monthly bulls have been trying to build a shelf of support at the same place that they struggled for 2 years back in 2021 through 2023. Monthly downtrend, we're trying to recapture. Definitely one of the sectors that's been lagging the hardest. I'm not picking individual healthcare names, but I am long the index, as I do believe it to be, namely undervalued, number one, and number two, lagging pretty hard behind the other sectors. Moving on to semiconductors right now, up 0.84%. Semiconductor SMH, guys, brand new all-time high on semiconductors, looking very strong right now. Clear daily uptrend in motion. Any move lower, going to be looking for a higher low. Anyone above 272.31, higher low for further trend continuation. If you roll this over into a daily downtrend, who's in control on the higher time frame? Clearly the bulls, breaking out of a big zone of resistance right there. So any move lower, looking for a weekly higher low. It's going to take a lot for the bulls to lose the higher time frames, right? Beautiful weekly uptrend, looking for a higher low on any rollover, and this would be a fantastic buy the dip opportunity in my opinion. Moving on to the monthly time frame, we can clearly see super bullish June candle close, and we would not be surprised if July is also fairly good. Seasonality, monthly MACD curling over, very strong close, and overall no negative macro to deal with. Might just be looking for further expansion in semiconductors. Moving on to the Russell right now, 0.93% to the upside. Even small caps are now participating. Beautiful daily uptrend to the upside right now. We have now reclaimed one area that I refused to close green before they closed the candle. Now we can close this green. It's been a while that we've recaptured this level, guys. A very long time, since the month of January, but everything is looking good on this time frame too. Looking like a gorgeous uptrend on the weekly, and I'll remind you, any moves lower, looking for a higher low. Anything on the weekly above 206.60, 207.60, higher low for further trend continuation. Your medium-term bulls are in control, and the monthly candle close did show that we might just be looking for more continuation. Now, the next line of defense was these guys and a portion of these guys as well. That's going to be 225 up to 231. The Russell might just be an interesting catch-up play. I don't believe it's ran too far already. It's still a decent catch-up play. I'm not playing it myself. I'm playing individual names, but for those of you looking to play ETFs, maybe not the worst proposition if you're looking for that ever possible July expansion. That's everything for our major sectors. Take a look at the minor sectors overall, as we do on every Monday and Friday. XLP, we were noticing last week that XLP was probably a buy as we were looking for the broadening out of the markets. It's now happening. Consolidation range above support. And now we might just be looking for the breakout. No new all-time highs for a very long time. It might just be time to participate for the XLP. And one thing that you got to pay attention to, guys, is the broadening out of the markets. If you want to see those other sectors participate, just take a look at the moving averages, right? Percentage of stocks above their 20-day EMA, 76 and coiling higher. It can move a little bit higher. Granted, we are moving into some form of overbought conditions, right? The top end of this chart right there is around the mid 80s. So there's a little bit of room to go. We can look over the past, let's say 20 years of data. We can move a bit higher. It just lets you know, okay, if the 20 EMAs are curling a lot higher, stocks above their 20 EMAs is curling a lot higher, we get to overbought conditions, what's that going to mean on the SPY? Well, eventually the SPY is also going to hit some form of a wall, right? We can't just go up every single day, and we're going to pull back. But we know the weekly and monthly timeframes are in control, right? Well, we can then use the longer term stocks above their longer term moving averages to compare. Right? It's not necessarily the same thing, but they go hand in hand. Percentage of stocks above their 50 to AMA, which is what the institutions look at a lot, is at 75. We're coming into the top end of resistance here, but we know we can expand a little bit more. So we also know the daily charts are extended on the SPY. The weekly charts are also a little bit extended, but we can go more. The kicker is the long-term broadening out of the market. The stocks above their 200-day EMA was under 50, guys, since the tariff episode started. Now, and only now in the past week, have we actually started broadening out in the market, which is what I was commenting on the Tuesday video session. I was saying, watch the rotation, follow the rotation, and you'll make a lot of money. Now, it's not only tech and semiconductors, now it is everything starting to slowly but surely participate, and now more stocks than not are above their 200-day moving average, and this one is not even close to being at the top end of how bullish it can actually be. So, which is why I say any short-term pullbacks on these indexes will be buying opportunities so long as we are starting to see the broadening out of the market and several sectors come back into bullish favor after not being that way for the past 3-4 months. It's just now happening to where we're broadening out. We are now hitting short-term extreme greed. So short-term, we can see some pullbacks here and there, but as long as these longer-term timeframes and longer duration sectors are starting to participate in the markets, you would not be surprised that any and all dips could indeed still be for buying opportunities so long as the macro data stays good, and we should still have a clear 1-month window for that to happen. So that is my positioning into the month of July. Of course, we have to look at the data all the time, but that is what we're going to be looking at, right? So XLP starting to participate now. You may start to see more participation in utilities as well. Utilities has been barcoding for the last how many weeks in a row? 2 months roughly. Barcoding might just be ready to see some expansion. The bias is still bullish. Real estate also barcoding above support, which was 41.39 down to 39.27. Looking good for some expansion. We're starting to see some names get some love. Home builders finally trying to go for a weekly uptrend breakout pattern here. First weekly candle close above the 12 EMA in the last 6 months. That has to be noteworthy to you guys. And the first monthly candle close of June. We're already into July. We're already printing a decent candle. The monthly MACD also seems as though momentum is no longer spiking more and more negative. You might just be able to see the home builders, guys, start to rally. This is another sector that usually you don't see this, and basic materials, if people are scared of a recession, right? So institutions are starting to take upon the risk of, they're willing to take the risk of whether or not there's going to be a recession or not. You definitely don't start bidding home builders. You definitely don't start bidding real estate. And you definitely don't start bidding the Russell if you think there's a recession on the horizon. Those sectors now getting a little bit of love. They may unwind those trades if the data changes, but you got to follow the big money, guys. They're showing you, they're telling you that they are showing up to participate in these trades overall. Now, we got to talk about the yields today. We're not going to do the VIX because it's down. The dollar's just been the same. In terms of yields, well, of course, with the jobs data, guys, yields are not going to go anywhere, right? Keep that in mind. So no more rate cuts in the month of July, maybe September, maybe November. We'll see. But yields coming up today, I wouldn't say they're very problematic until the 10 spikes to 4.5 and until the 20-year spikes back to 5%. But of course, these are going to oscillate. The bond vigilantes, the institutional demand, stable coins transferring into treasuries, foreign demand for bonds. Yields are a very complex topic, guys. Domestic banks now with the lax of regulations from the Fed towards the liquidity requirements for banks. The banks are going to help yields go down as they buy more bonds. It's a very complex trade, guys. The one thing you have to understand is it a good proposition to be buying bonds down here if you're the type of person that wants to be buying bonds? Yes, but the trade is going to be very, very slow, so you may as well be in shares or very long-dated call options. That's the moral of the story, rather than trying to predict where yields are going to go every single day, right? Moving on to gold right now. Gold also not looking the worst right now. We knew there was a daily downtrend underway on gold. Nice engulfing move, looking for the higher low and get the trend change back to the bulls. The support area right now is 33.11 down to 32.59. This, coming down into this area, guys, is the positioning. The stop loss, if you're going for a swing trade, it has to be a weekly time frame swing trade. Yeah, what are you going for here? The next leg of weekly bullish expansion after coming into the 12 EMA. This was a bull flag. You got the expansion move, higher low, and you're looking for the trend change. It may or may not happen. That's why we trade with a stop loss. Stop loss goes below here because if we roll this over, well, of course, guys, that is not the weekly higher low. You're going lower, and unfortunately, you're going to erode a lot of this monthly momentum, and you could be going into monthly consolidation. So the last thing you want to do is stay in the trade beyond there because that would be monthly consolidation, and you may have a lot more to fall. If we're looking to take a swing trade on gold, it's very, very simple. You're looking for the breakout, so the entries can be here. Periodically, you can scale in, but at the scale out, if we break this low, it invalidates the entire setup, and you're looking for the weekly push, right? TP number 1, 34.44, and then all-time highs, 3,500 for take profit number 2. Not bad risk-to-reward trade, in my opinion. And now, lastly, Bitcoin, before I move into big tech right here. So Bitcoin, looking good, guys. Looking very good, right? Same as gold. This is the exact same trade as gold. It's just a different asset, right? The daily downtrend, right, into the support level. Then we got a nice engulfing move by the bulls. Back test and run. Is that not exactly the same trade setup that we just saw on gold? The charts, it's the same move. Obviously, the charts are not going to look identical. It's the same trade, though. Downtrend, engulfing move, higher low, go for the daily uptrend sweep. That is exactly the same type of trade we're looking on Bitcoin right now. Daily downtrend, engulfing move. The bulls have a lot of space to set the higher lows into support, 105 down to 101, and go for the expansion leg. Now we're getting the expansion leg. Here is not a bad entry, but you got to move the stop loss, right? If you were not playing the back test of support with a stop loss below there for a very wide target of 115, you have to go with a very tight target right now, right? 105 is the stop loss. Why? If you break that, it invalidates the entire setup, and you bulls are going to need to consolidate a little bit deeper into support, right? So that being said, if you're going for the weekly expansion, stop loss right now, even if along from here, the stop loss has to be a little this low right there, below 105, and then you are targeting psychological levels of expansion, 115, 120. Still decent risk reward in my opinion, and Bitcoin is looking good. We know the weekly candle close last week was good. We're getting some nice follow through. July is usually seasonally bullish for Bitcoin, and the monthly is just looking for a monthly trend expansion. Last month's candle close was not the most bullish, but not bearish by any measure. The quarterly candle close, I think that's the smoking gun, guys, which leads us to believe that we might get a little bit more follow through. So whether you're trading Bitcoin, whether you're trading MSTR or any other Bitcoin proxy, whichever one you want, guys, just position the trades accordingly because everything follows this chart right here, the Bitcoin chart, right? That's everything I had for you guys for the overall market rundown. Now let's dive deep into some big tech names, shall we? Okay, so moving into Apple right now. Apple up 0.52%. What a move on Apple the last couple days of trading, right? This was a very nice swing trade. Hopefully you guys were able to clip into it yourselves. You guys know that I personally took this swing trade and we made some very decent money coming into the resistance range. Now we're there. This is the take profit target. If you are trading this on the short term, right? Short term and long term are two different things. Daily uptrend is nice, coming into resistance into the 200-day EMA. Resistance range 221 down to 211. Any move lower, looking for a higher low for possible continuation if they cannot get this resistance range in one clean shot. That being said, the weekly, when it gets tight like this, guys, when we break, we usually break hard, and the break does not usually last for only 1 week. That being said, the weekly MACD, look at the momentum, guys. This is 4 months of bearish momentum, now turning positive. The monthly chart as well is looking pretty good. The bulls played good defense, might be looking for some expansion. And I'll remind you as well, year-to-date performance of Apple is still down 14.72, with the rest of the market very green coming into July. What do you guys think is going to happen, right? Probably Apple is going to get some of that love, some of that rotation. So short-term trades take profit, yes. But longer-term swing trades, you probably have another leg of expansion to be had. And the next target for the longer ones would be 231 to 240 in around the all-time high range. Obviously, if you bought long-term shares, you wouldn't be doing that. I'm just talking about the people who bought these lows for a longer duration swing trade. that is going to be the second area for take profit. So keep that in mind on Apple. Moving on to AMD right now. AMD down 0.44%, but we know what AMD has been doing. Just consolidation off the highs, right? 155 to 145 was the resistance highs, and now we are moving lower. What you guys need to understand right now is the daily bulls are in full control of this entire chart right now, looking very good. Still hunting for a daily higher low. However, we may have found it, right? Now, if we put in a new high and roll this over, that's a daily downtrend. You might think, oh no, daily downtrend. Yeah, but who's in control of the weeklies, guys? The bulls, right? So any declines right here should be dips for buying. 132 down to 120 is the support range. The weekly bulls are in full control. So when in doubt on the daily time frames, just zoom out one time frame and the control should be very, very clear above all the weekly EMAs. Any pullbacks on AMD, I will gladly play by using short puts under the market or even positioning with some call debit spread longs here, maybe even some leaps. I'm still undecided, but it could be a very good candidate for that as the valuation is still very cheap for AMD, and I do believe that they will be able to fulfill the prophecy that has been bestowed onto them of expanding EPS exponentially and expanding revenue exponentially as well. So you may think that you're late on AMD, guys. In relation to what they're trying to do in the next 2-3 years, we are definitely not late in my humble opinion. Sure, we're not buying the lows right here, but still, guys, it's all about the numbers. Do the numbers still make sense at 140? And the answer, in my humble opinion, is yes. Moving on to Amazon right now, 1.6% to the upside, looking very good. Amazon attacking the resistance range. Been struggling with it all week, but are still maintaining well. 228 down to 217 is that resistance range right there. We'll see what the bulls can do, right? If they break, no new highs just yet. If they break this, perfect. Daily uptrend continuation, and we might just be able to do the good old breakout, retest, and run trade. If we falter from here and go into a bit of a downtrend, who's in control, guys, of the higher time frames? When in doubt, zoom out. Yeah, it's resistance. If we fail, understand who's in control. Look at this weekly candle last week. Look at this week. Trend continuation candles. The bias is for upside continuation, but if we pull back, we got a lot of space. Anything above 207 on a dip, I'll be looking to load some more short puts on Amazon. Swing trades for Amazon, I already have mine. Mine were built down here, and I was giving some non-financial advice that it may be a decent proposition here if you wanted to go for some swing trade longs. Swing trade longs are still in effect right now. You would be targeting the all-time highs for the breakout because it's a monthly trend continuation right there, looking very solid overall on Amazon. And Amazon, for me, I still do believe, despite its current valuation at around 223, even we're close to the all-time highs, guys, I still think that Amazon is undervalued in relation to what it can do over the next 2, 3, 4, 5 years. And if you're buying long-term shares, that should be your time horizon. Not so much the short-term, but the long-term, and Amazon is looking very good. On to Google right now. Google up 0.44% overall. Google might just be looking to break into its own resistance range. 184 up to 190 is going to be that resistance range mark. Keep that in mind. In terms of the daily, we'll do the breakdown on the daily first. A daily downtrend, engulfing move, higher low is set, and now maybe looking for the daily uptrend break. This is the same trade all the time, guys. It's just trend changes. The best possible scenario is an engulfing move, higher low is set, and now move. It's gold, that's Bitcoin, it's the style of trade on everything. It's just, you know, classic, the engulfing move into uptrend shift trade. Essentially, when the long-term bulls control the weekly uptrend, that's the style of trade that you're looking for on any pullbacks that might just be interesting for you. So keep that in mind. If we do continue, you guys know where the resistance range is, and the longer term bulls are in control of this chart. They never lost it. Weekly uptrend, very nice. Coming back into support, back testing into resistance highs right now, looking very good. This is where I bought my leap call contract. You may think you're late, but when you're thinking whether or not you're late, look at the numbers. The numbers do support some further expansion for Google. Google is significantly undervalued in my opinion right now, right? The profit price targets for Google for me in 1 year is about 220, 230. So keep that in mind. We're definitely not late, especially if you're not using leaps contracts with like a year and a half, 2 years of time. There's still a lot of time for Google to show what it can do in my humble opinion. And long-term portfolio shares, you guys know I've been adding a ton in the entire time of this correction. Moving on to Meta right now. Meta up 0.76% today, but green day, but a bit of a red candle. So Meta's still consolidating after its all-time high push, but we know who's in control. Daily uptrend right now, any move lower looking for a higher low. Still, the weekly time frame is still the clearest chart in my humble opinion. Crack of the all-time high. The weekly bulls are in full control on Meta right now. Set the higher lows. Bit of consolidation. Meta might be looking for a little bit more. This is one that I'm not adding any more shares to for my long-term portfolio because I did a good job of adding some back here during the correction. Okay. However, if we don't have a meta position yet, because I'm sure some of you don't and are considering maybe building one, it's not the worst valuation right now. It's not very good, but I would assume the valuation of meta, well, not assume, the valuation right now is somewhat fair, especially in relation to 2026 and 2027 EPS and their margins, ever improving margins, and the expansion of revenue and EPS, guys. Meta's looking very solid for the next 4 years, all things considered. Revenue and EPS and free cash flow and margins will be expanded. It's not a bad bet. It's not the most favorable price, but we can't get those prices anymore. So we have to look forward, right? It's not the worst. Moving on to Microsoft right now, I cannot say the same thing about Microsoft. Microsoft indeed is expensive, almost coming into $500 today. Again, higher lows are set, looking for the expansion, did not quite get it. In the event we break down lower, because I'm sure that's what everybody's waiting for, but it just hasn't been happening. If we break down lower, looking for the daily downtrend, just who's in control, right? The weekly bulls, obviously, right? However, weekly overbought conditions, this is true. Daily overbought conditions, this is true as well. And the move is very extended from the EMAs. If we get a pullback and we get some rotation, if the money moves from here and here to Apple, Amazon, and Google, and the other ones, Netflix, Microsoft, Meta, the ones that have ran a ton, if they pull back and rotate, the bulls are still in control. It'll just be healthy rotation. The clearest area of support that we have below us is 460 down to 443. I'm not adding any Microsoft shares up here. I did a good job of that, the entire accumulation range and the tariff lows. Not adding any more, but I'm not selling any Microsoft shares. No swing trades either from me. It's run a lot. It's overbought. Not my style. Moving into Netflix, same concept. I'm not adding any long-term shares. I'm not taking any swing trades. Why? Because most timeframes right now are slightly overbought, extended from the EMAs, both on the weekly and the monthly timeframes. Monthly is overbought. It's not my style to take swing trades up here and be super greedy with it, right? Maybe it's your style, but it's not mine, so I'll just run you through my style, right? Daily higher lows are set right now at a 1269. In the event we flush, a little bit of a high, no new highs, no new all-time highs, and the flush, that's a daily downtrend rollover. That is rotation to a weekly higher low, weekly correction, and you're just gonna be looking for 1182. This is the clearest area of support, in my opinion. It's not that solid, not as solid as something like this, you know what I mean? But still, it's the closest one we have, and it lines up with the 12. Like I said, no swing trades from me, no long-term share additions from me, but I am holding every single share of Netflix that I have, at least for the next 5-10 years. Moving on to NVIDIA right now, almost 160 today on NVIDIA looking, I mean, they pushed into it, couldn't close above it though. NVIDIA looking very strong, daily uptrend continuation. Higher lows are now set at 151.86. Any move lower, new higher low for further trend continuation. Until that stops and you see a daily downtrend, weekly consolidation is not here just yet. The bulls looking very strong. The weekly bulls are still in absolute full control of this chart. And even if we do get a temporary back test, we're back testing prior all-time highs, which would be roughly 150 down to 145. That would be the area for a swing trade. They almost gave it to us, but it was a little bit short. So I did not play NVIDIA. I played other things in semiconductors, but I did not play NVIDIA. But congratulations to all long-term shareholders of NVIDIA. You must be happy right now. Adding shares of NVIDIA here at the all-time highs is not a terrible proposition. It's trading at like a 35 forward price. This is at 140. At 160, it's about 10% higher. So this would be about a 35. The PEG ratio would be about a 1.55. The price to sales would be like an 18, 19. It's not terrible, but it's the same situation as like, it's the same situation as like a Meta, right? It's not like Microsoft or Netflix to where it's crazy overvalued, in my opinion. But it's also not cheap, right? You're not getting a deal, in other words. It's not a bad buy if you're very bullish on the company for the next 3 to 5 years, which you probably should be. Swing trades for me, not yet. No, not a big enough pullback for me yet, but any shares that I would have, I'm definitely not selling, right? So it's up to you. Moving on to Tesla right now. Tesla roughly flat on the day after having a nice push the last 2 days. Roughly flat today, right? They're going to struggle with this area right there, which is 320 up to 330, and we're kind of just trapped. The daily is somewhat messy, right? We know we bounced out of support, which was 302, down about 260, and overhead resistance stays put 360 up to 340. It's like Apple, right? This is now going to just be a consolidation range. They had their deliveries the other day. The deliveries were somewhat underwhelming. Everybody's going to be waiting for earnings. I would be very surprised if Tesla either breaks down or breaks significantly higher much before their earnings. Maybe if July is a crazy month for the markets, maybe it can carry Tesla higher. But on its own, from its own news, maybe not, unless some crazy robotaxi news comes out. You know, the best way to play Tesla is on any deep declines here. Maybe if you love playing Tesla, play some short puts below the market. It requires a big account size, but that is what I would likely be doing. In terms of fundamentals, I'll probably be waiting for the earnings call to reevaluate if it's a good deal or not, depending on their growth metrics, their free cash flow, their earnings per share, and their margins come Q2 earnings. Moving on to Palantir right now. Palantir up 1.7%. Palantir did not have a very easy week. They're just consolidating. Nothing special to see here. Daily uptrend into the sell-off, which is fine. In the event we get a lower high into lower low, not the biggest problem for Palantir. Like I said, there's a lot of money in this bill for defense, and I'm pretty sure Palantir is going to get a portion either directly or indirectly of that federal spending budget, right? Even if we get the daily downtrend, the bulls on the weekly are in full control. You got support down here, 125 to 120. Not looking bad for Palantir overall. I've said a few times so far, if we pull back with some volatility, I don't mind playing short puts on Palantir down in the 115 to 110. It's not cheap. It's not something I do normally, but we can acknowledge the fact that it does have momentum and very positive sentiment. I know the valuation is extremely overblown. I know as a Palantir shareholder, guys, but I used to do this. I did this chart on UNH and I kept the pie chart there for this specific reason, right? There is always 3 components to a stock. It's very ugly. It's very ugly right now. Excuse me. So, okay. So there's 3 aspects. There's the technicals, which we review a lot. There's the fundamentals, which we review a lot. Palantir has bullish technicals, right? It may be overbought on the monthly and weekly, I know, but it also has bullish technicals. The bulls are still in control despite being overbought. The fundamentals are terrible, right? Even if you project out to 2030, it's overvalued, guys, right? So this is bad. This is also overbought, but it's sentiment. Sentiment sometimes can overpower everything. Just look at UNH. It blasted through all your technical zones. It blasted through fundamental levels of being cheap, 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 cheap. I mean, it was cheap here, it was cheap here, it was cheap here. It didn't matter. It kept selling, right? Palantir is the opposite, right? So keep that in mind. It is entirely sentiment driven. So although you might say it's so overbought, it's so overvalued, trust me, I know. But sometimes sentiment is enough. Essentially what I'm saying is it's a cult. And we've seen these happen time and time again, right? That used to be Tesla. Now it's Palantir. Now we're starting to see the same thing on Robinhood, to where valuation just gets thrown out the window. You know what I mean? It is what it is. Moving on to SOFI right now. SOFI up 2.5%. Overall, not looking too bad. Daily higher lows are now set. They seem to be wanting to go for new highs. So the bull's still in full control of this chart on the short term. Higher lows are set. If we unravel, though, and flush these lows, that would be a daily downtrend. And that would be synonymous with a bit of weekly consolidation. Good thing, though, the weekly bulls are in absolute domination mode right now. Higher lows are still at around $13. Any move lower, higher low for possible further trend continuation. Of course, where's the support zone? Well, it's roughly 16 down to 14. So any pullbacks into that zone for XYZ reason, in my opinion, will be a buying opportunity, either for short-term swing trades to the back to the highs, or selling puts under the market right now. SoFi is looking good. I had a very fun time. Well, I've been accumulating SoFi shares for a while. I first started back here last year, not a big portion, right? Then it ran. I couldn't buy anymore. Consolidation with tariffs, I bought more. Now I'm pretty much full, and I'm just riding the shares that I have. But if we see a pullback here, maybe I add a couple hundred more shares, but still, you know, right now at $17, $18, it's coming into, well, not terrible PEG ratio, but keep in mind they're growing EPS very, very rapidly right now. This is not going to last forever. So it is, you know, it's fairly valued right now, but we can see some expansion over the next 6, 12, 18 months into the mid 20 range. But it's just the risk reward profile right now is not the best, not as good as it was back here, that's for sure. 2 last ones, then we're going to move on to other things right now. So 2 last ones, Uber and TSM. Uber up 1.72%. Not the worst, but Uber's still just consolidating. This is a bull flag. Classic bull flag, right? Beautiful bull leg of expansion, bull flag, and might just be going for it. If you want to play this, it's a super tight trade, guys. The stop loss is here, right? 89, 87. If you invalidate, it's daily downtrend, and unfortunately, we're going to consolidate a little bit more after this very beautiful weekly move. But if we're correct and we go for expansion, stop loss is $3. Take profit is $100. It's roughly a 2-to-1 risk to reward trade. Not the worst proposition in my humble opinion. So that's a swing trade proposition on Uber. And as I said, if we do unravel there, just going to be looking for a higher low for further trend continuation. But the bulls are looking good, guys. It's looking good on Uber. Nothing too bad to consider. Same thing as Meta. Same thing as NVIDIA, right? It's no longer cheap, but it's also not expensive. It's kind of right there in the middle. So not the best time to add long-term shares. It's not terrible, right? But still, it's no 60, it's no 70, and it's even no low 80s, where it was the last time that I was saying it was okay to add. Now it's ran, right? Now, lastly, TSM. TSM is also something like, TSM's like, well, TSM's not like, it's like Uber, NVIDIA, and Meta in the respect that it's at all-time highs, but it's also significantly cheaper, okay, than those other companies. We're trading at a 23, 25 forward price to earnings, roughly, a relatively cheap PEG ratio. They have fantastic margins, great demand for the next 2 years, but we're at all-time highs right now. So the bulls are looking very good. So adding long-term shares, not the worst, but still, you know, you're not getting the best deal overall. That being said, I mean, the daily bulls are just in full control of this chart. New daily uptrend right now. Higher lows are set at 221. Any move lower, looking for a higher low for possible further trend continuation. In the event they lose the pattern and go into consolidation, you have to understand who's in control here, guys. I don't even need to say it anymore, right? It is obviously your bulls, right? The higher lows are set into support. Support still is 210 down to 200. And any extended consolidation will just be looking for a new higher low. The monthly charts, guys, held the key the entire time. Beautiful engulfing move, expansion right now. And the quarterly charts that close, look at this candle. Might just be looking for more expansion in the month of July. So I have my TSM shares that I acquired during the dip. I was very vocal on saying this is one of the best companies in the world. I'm now riding into profits. I'm not adding any more TSM shares. I'm just riding what I have, but I'm definitely not selling any either. So that is everything for your market rundown. Hopefully you enjoyed. I spent a bit more time on everything because it's the Friday video. It's a holiday weekend. And now you guys have a bit more time to look at everything. So that being said, now let's look at the biggest gainers and losers of the day. Okay, so let's pull up the list right here. We're going to go through just a couple of them, not as many as the other day, guys. The home builders to the downside. We talked about that when we covered ITB. Whether you want to play these individually or selectively as a group, this might just be a nice breakout trade for continuation. I don't want to hear anybody say, I missed the bottom, I missed the bottom. It's the bottom end range of a 5-year trend line right now. Put it on the monthly chart. If you ever think you missed something, go up a time frame, right? 5-year trend line, 9 months of consolidation, might just be looking for some upside, decent proposition. Whether you want to play these individually or as a group, they all have the same chart, so it's up to you. My favorite one is Toll Brothers, but as I said, it's up to you. Robinhood coming down right now. So Robinhood, of course, pushing towards the $100 mark. Bit of consolidation today. You guys know my opinion on this one. I've said it many times. If you are a shareholder holding from down here, the momentum is in your favor. It's up to you if you want to trim or not. We got overbought conditions right here. It's incredibly tough to start a position here. We just have to understand we're not getting the best risk reward trade. And even for compound annual growth rates, guys, you know, Robinhood is a fantastic company. Don't get me wrong. I like the company a lot. I used to play it a lot in the lower levels, and I made some good money on it overall. But at the end of the day, I know sometimes you guys don't care about valuation, but at the end of the day, valuation does matter. It may not seem like it in this market, but they're only going to be making $5 billion. Let's just add $1 billion for all the new features and tools that they're going to be adding. Let's just say that these estimates are wrong. And let's just say they make $7 billion, which would be a 30% increase over the estimates by 2028, and they have an $8 billion revenue run rate by 2028. The company is trading at an $83 billion market cap. That would be 10 times price to sales of 2028. 10 times price to sales is the standard for a lot of tech companies out there. And Robinhood is a brokerage, but it's also a tech company, of course. So we're trading at the top end of a value, and I'm increasing the estimates of revenue. I'm being very generous, right? Does it sound like a good proposition? Now, obviously, momentum, sentiment, and hype, and the cult can bring you higher. That is for sure. We've seen it play out time and time again with many companies. But at the end of the day, it's not something that you want to get in a bad habit of repeating over and over and over, buying things, having FOMO. There is so many opportunities in the market. If you don't get Robinhood, guys, you'll definitely get something else. The opportunities come around every single day, every single week, every single month. So don't stay laser focused. Don't get married to only one stock. There's so many other things to play. But congratulations to all the bulls out there. We'll keep an eye out for consolidation, but the bulls definitely looking very strong, whether it's monthly, weekly. Everything is overbought right now, and daily timeframes too. Everything's overbought. The valuation is extended. So it's up to you to determine whether you want to keep playing this one and keep taking your shot and go for incremental money, or if you want to maybe shift your focus to some other things that have been consolidating. And you can go with some of the other names, some of the other hype plays that move a lot. You don't have to go into Berkshire or something like that. Some of the names like Rocket Lab, just wait possibly for some pullbacks, not too bad. Some of the names like Oklo, some of the nuclear plays, right? Oklo's coming back down for the retest. Whenever they get up here, and nobody ever thinks they're going to pull back, and I'm just sitting here waiting for these names to pull back into support. If they come in and pick me up, fine, I'll play them, right? Like SMR as well. Right? Some people thought that it may never. It was all the way up here. FOMO. I absolutely have to get in. Well, if it consolidates for one more week, maybe it comes back and picks me up. You know what I mean? These consolidation periods happen all the time across your favorite names. The quantum computing stocks is the same thing. They rally really, really, really hard. Everybody wants to get in up here. If you just wait a little bit, maybe you can get a 20% pullback. Circle, same concept. Everybody wants to buy it at the absolute highs, thinking that they absolutely have to get in. And lo and behold, if you just wait for some pullbacks, you can get like a 40, 50% discount sometimes on these names. I keep them all on a watch list. When they're up here, I say, it left. Congratulations to everybody who rode the full round. I'll wait for a pullback. If it does pull back, maybe it can get me in. One of the stocks that did that has been doing that recently was CoreWeave, right? Everybody wanted to constantly get into CoreWeave, and it's fine after the IPO. It moves in cycles, but when the weekly chart starts looking like this, guys, right? Super extended like that, well, you know, eventually a pullback is coming. It doesn't mean it has to be a deep pullback. Wait for the bulls to tell you where they want to play the support range. And now that's been acting as a nice support. The beautiful thing when you have a support range is you have defined levels for a stop loss if you're swing trading. So you're buying the dips into this range with a stop loss below there, because that would invalidate the entire area and may lead you into more weekly consolidation to a lower level. So far, that did not happen. So people that are swing trading, they're swing trading with a stop loss there and going for resumption back to the highs. If it doesn't play out, no problem at all. We will reset at a lower level and take our chance again. That is the nature of trading. We cannot be right 100% of the time. We have to look for risk to reward setups, right? That being said, CoreWeave is looking very attractive. And this one, even though it's close to the all-time highs, take a look at the market cap. The market cap is 80 billion, right? I understand they have a lot of debt, and the refresh cycle of their GPUs is somewhat uncertain. Price targets are down, but look at the forward estimates of sales. 2028 is $21 billion. That being said, the market cap is right now at 80 billion. That is a 4 times forward price to sales. So this one is not trading as rich as Robinhood is, despite both charts being at all-time highs and arguably in weekly overbought conditions. So not everything is built the same. This is one that I don't mind playing the shallow pullbacks for some expansion, because the fundamental thesis does support some expansion as well. When the technicals line up and the fundamentals still make sense, then I will play some things more aggressively on shallower pullbacks for continuation. When nothing makes sense, then I don't play it, right? So hopefully that makes sense. You know, just going through the negative names of the week. Rocket Mortgage, I took a position on Rocket Mortgage today. I'll show you guys that in a few moments right there. But Rocket Mortgage, possibly some sell down now, because they acquired Redfin. Redfin is no longer trading as a stock, right? All the Redfin shareholders got Rocket Mortgage shares. So maybe some of those people don't want to participate in Rocket Mortgage and they've been selling off. But RKT looking very strong here. It's part of the whole, you know, home, whether those home improvement trades or anything like that, right? It's an interest rate sensitive financial trade, right? Looking very good for some possible expansion. My price target for Rocket Mortgage in the event of no recession scenario, $20 is not that far-fetched. It literally did it in September and October leading into rate cuts, right? And then yields went higher. But when we do actually get the next round of rate cuts, my price target, as I said, for this time next year or maybe end of 2026, $20 is really not that far-fetched. When this one starts moving, it can start moving quite fast. Other than that, that's all the ones I wanted to cover on the downside. The ones on the upside, we already covered. CoreWeave was one of them. Circle was another one, right, where I said that it might be decent for a upswing trade long. The bulls are playing good defense down here. So if we want to take a trade based off of this level, the stop would go below here, 172, because you're essentially what you're looking for is the 4-hour chart reversing now a little bit. You get that 4-hour reversal, you know that the daily consolidation is probably finished. After a couple legs of downside, you're looking for the daily uptrend recapture as well, and that will be your weekly low. So if you're looking for that and you want to play with the tight stop loss, the stop loss will go there. $15, $16 stop loss. I know it sounds like a lot, but where's your target, right? If you're looking for the weekly expansion, well, it would be in the mid 200s, right? The top end of these closures, or the opening and the closure of that candle, that would be take profit number 1 here, and then you're targeting all-time highs 300 for take profit number 2. The risk to reward is very good on this trade with a very somewhat tight stop loss. If it's not the case and we unwind, well, then we're going all the way down there, possibly 160 to about 145, right? And then we can reevaluate if we can take that swing trade again at that later time. Datadog being added to the S&P 500, right? The last company that got added to it was in March. It was DoorDash, as a matter of fact. Datadog looking very strong right there. I'm not buying. It's not my, I mean, you can make an argument for every single company in cybersecurity right now. My favorite plays in cybersecurity are Cloudflare, Palo Alto Networks, and CrowdStrike. Those are my 3, and Fortinet, number 4. Datadog, special shout out to them. Solid company, nothing special in relation to the other ones that I just mentioned, however, but nice addition to them there. I'm not playing this one. I'm not playing any cybersecurity companies right now. The valuations are very expensive. The time to play them was during the pullbacks here, so I'm not playing them. I'm favoring other plays overall, but congratulations to anybody holding Datadog. And Symbotic continues to be the robotics play that sadly I did not get in, but we can clearly see a monthly MACD cross after a year worth of bearish momentum. You may finally be getting some moves right there. The valuation right now is quite expensive, so you would be chasing right now. All things considered, if we get a nice pullback on this one, I don't know if we're going to get it or where it's going to go if we do get it, but maybe, just maybe, if the pullback lasts long enough, I'm going to have to redo some levels here because now we're beyond any levels. This would be the next level right there. Resistance, support, resistance here, resistance, support from back there, right? All of these touches lets you know that it's a pretty significant level overall. So keep that in mind. If we get a back test of this level, maybe that is the launch pad for the breakout, retest, and possibly revisit for a swing trade long. That's pretty much everything I wanted to cover. Of course, there's many more, guys, but there's only so much time in these videos overall. So that being said, that's everything I want to give that to you guys. Now, in terms of the positions for the portfolio, we're going to wrap it up in the next 5 minutes. Sorry, I know the video is going to be over an hour, and I know when people see the video length over an hour, they don't want to click. But for you guys that have watched so far, I appreciate the heck out of you guys. Thank you so much. In terms of the trades, guys, this week, very easy week in terms of trading. I showed you guys these trades yesterday, I believe. We got one trade on Apple. Most of all these were on the top 5 options list. If they were not, they were in the bonus plays. Apple, 197.50, played earlier, 88 cents to 8. That's 90% win. Circle, very easy, 125 strike, guys. When I say that you can play Circle with some good distance on the wheel on a weekly basis, you don't have to go too aggressive. Look at the strike I got. I got a 125 strike when the stock was literally trading for 180 earlier this week, right? That's a heck of a decline. I mean, give me the shares. If you want to pull back 31% in a week with a favorable narrative behind you, I'll just take the shares. Just give them to me. Google, we played Google 172.5, 60 cents. We took these on Tuesday, I believe. 8 cents were closed yesterday pretty much in anticipation of the non-farm payrolls. I closed Google and AMD yesterday just in the event that non-farm payrolls would come out negative. Markets would have probably came down and I would have probably reset for next week. AMD was also a nice little win here. We took this trade late on Tuesday, 40 cents down to 10 cents. All of these wins combined were 0.5% for the account, at least the portion of the account that I used for the wheel. So nice little wins there. Directional trades, you might remember some call debit spreads. MasterCard, we sniped MasterCard when it was at the lows down here. I was telling you guys that MasterCard was probably a good deal. Sniped the lows, 200 EMA, easy support range right there. Came into our target of 565, which is literally just these guys here. I don't have a line there, but it's these guys right there, right? 565, clipped it into it the other day. We closed that one for a very handsome ROI profit. UPS, we had this one for a while since after tariffs. We closed it early on UPS just because we were running out of time on that contract. We came into the bottom end of our strikes. It was a debit spread, 105 the other day on that pop. We've been in this one since there. We were running out of time, guys. And you know, when you're running out of time on call options, any red days, it's just going to kill the contract. So we saw some profit. We took it off the table. I don't mind playing UPS in the future, but I'll have to reset in terms of the time. We were running out of time, so we closed it at a small win, but still a win nevertheless. And Apple, we made this was the swing trade on Apple, right? Some of my members took straight call options. Some people took leap call options. Other people followed me with the debit spreads. You know, they're all just different tools. The area for the swing trade was very clear. We made some very decent profits there. And MSTR, you guys might remember, I've been holding MSTR for a while. We took a small loss on it. I talked about this one yesterday when I reviewed the portfolio, or on Monday rather. We took this one here, right? Trying to go for the first Bitcoin breakout, retest, and run, which was this whole area on Bitcoin. The breakout, retest, and run. We took that trade there, but unfortunately, an extra month and a half of time passed, and MSTR did a whole lot of nothing. Our contracts burned, and they were literally worth like 30, 40 cents for the past week. We were at $1.66. You see, I still have one right here, and I told my members yesterday, I say, listen, if we can get a nice little pop on Bitcoin with jobs or whatever, right? If we can get a nice little pop on MSTR, I'll close one of these contracts just to lighten the position because their expiry is July 18th and our target is a break of these guys, right? It's 435, 440. We can get there by July 18th, but it's not a sure thing. If we pull back into next week, the contracts are once again going to die and end up worthless. And I had 2 of them. So I figured, you know what? Let me take advantage of today's rally. I was able to close them for $1.20 on the close today. It was a lottery trade to begin with, right? I closed one for $1.20. It was a loss. We bought into them for $1.65. However, I lightened the burden. I want to give it a chance to expand because the charts are looking good for the next 2 weeks. I'll give it a chance, but I didn't want to do it with the full position size. For me, you guys know me. I have a few accounts, right? $300 total position size, 2 contracts is not very large, but it's the principle, right? It doesn't matter the size of the trade. It's the principle and how you trade. Risk management is always number 1. So we closed one for a tiny loss, $1.20, and now I'm keeping only 1 contract, moon or dust. If it plays out, perfect. If it doesn't play out, we'll probably have to close it for a loss here. Maybe we'll have some recapture value, 30, 40 cents. We'll ride it until the last week of expiry. So we'll see what happens, but I did some proper risk management there. It was our only small loss of the week. That is the trade recap of the week overall. Another great week for us overall. It was a small trading week, so we made do with what we could. Today, I was telling you guys, I was waiting for today. I had all my buying power for today to go shopping for next week. Why? Because this afternoon was off. Tomorrow, Friday is off, and then we get the weekend. When we're selling options, that's 3.5 free days of time decay. So what did I do this morning? I fired off a bunch of trades, especially for the wheel. We got some BITX $48 puts, which would be Bitcoin 99,000 by the end of next week. If they want to assign me there, no problem. I'll take the shares. We got 28 cents for them, a fairly decent price, 0.5%. CoreWeave, we went with the 125 early in the morning before CoreWeave had the 6, 7, 8% move. 125 for 70 cents. That's over 0.5%. They're already profitable. Rocket Mortgage. We went with the $13 strike when Rocket was down 3.5% this morning. We got 10 cents. I know it's not a lot, but it's about 0.75% for the week. That's looking pretty good there. And TEM, Tempest AI, another stock that, you know, when it rallies, bringing to the concepts I was talking about earlier, right? When it's all the way up here, people want to buy. Oh no, I missed it. All the way up here, oh no, I want to buy. But, you know, I'm just sitting here waiting for the pullback. I play every single pullback that this stock has, and if it pulls back more and gives me some shares, I will once again be glad to get assigned those shares, as the covered call premium is very juicy. But if I don't get assigned, well, at least I'm getting paid for putting my capital in it, right? 52 strike, we got this one for about 30 cents, 29 cents, and now it is already 50% profitable after just a few hours in the market today. So our wheel trade, so far so good. I have a ton of buying power into next week. These are just a few trades that I wanted to do prior to the weekend. And as you can see, I still have all of the rest of my positions. My meme stock, Restoration Hardware, 4 shares. Those have been there for like 2 months at this point in time. We'll see what happens with those. Affirm, the leap call option, still looking good. We're almost up 2x on that from the time I bought it. Other than that, we have the K-Web calls, also leaps. Those are currently down right now, but not down by a lot. I'll maybe add one more to them. The Rocket Mortgage calls, they're up fairly well right now. We got into them for 270. They're up by 375. So let's call it what, 30, 40%? Not too bad. Then also we have the TLT calls, January 2027. We'll see what happens with those. We're underwater on them, but still not too bad. Into those rate cuts into 2026, I think these ones will have a better chance of playing out. We also have the healthcare call, $130 strike for the expansion of the healthcare sector, January 2027 as well. These are leaps. We're currently up about $120. Not the biggest gains, but we're up. And we also have a few new debit spread trades. So Adobe is Adobe. We've been in this one for about 2-3 weeks at this point, looking for the expansion into 430. I'll go through these individually, guys, just so, I haven't run through them, but I'll explain to you guys what I'm trying to do here. And we'll use the weekly charts for that purpose. Adobe, weekly uptrend. We're looking for the uptrend cycle into 430, 430. That's why I have a call debit spread on them. I kept it small. Amazon is a leap contract. You guys have seen that one for a while now. We're up decently on this one. We got it, pretty much right after the tariff pause, the day of the tariff pause, early on the news. That's when we got the Amazon contract. It's looking good. We're up about $1,600 on $4,800. So what is that? Like 30 something percent, I guess, right? Let me just do the math, right? 1680 divided by 4834, about 35% on that one. Not too bad. ASML is a new trade we took the other day. ASML, same concept. ASML, we're going for the lagging play. What are the plays that's lagging behind? We're looking for the expansion of the weekly time frame here, okay, into the resistance range. That's why the target is the resistance range overall. Not too bad. Other than that, Berkshire is another play that I've been talking to you guys about. We're currently roughly flat on Berkshire right now. We're looking for the bottoming out into support into the 200-day EMA, and we're looking for the expansion of the resistance range. Not too high, only up here. Okay, that's the resistance range that we're looking to play, and we should be able to make profit on that one. These are all for October or September. We got tons of time. CRM is a new trade that I did today. Also a call debit spread. I'll show you guys the strikes after, but take a screenshot if you want. Looking for the daily uptrend expansion, but the weekly as well. Weekly, looking for the weekly uptrend to curl. MACD, momentum is good, looking for expansion into the resistance range. Playing some catch-up trades with the market. Those are the 290, 300 bull call debit spreads for October. Google, this is a leap. I showed you guys where I started that. Google leap overall is a very obvious location. We literally took it at the low of the day back here, okay? Beautiful back test of support. I was telling you guys I wanted to play it. We now have a leap call contract looking for expansion. My target on that one, well, it should be fairly obvious. It's a debit spread. We're looking for high or low, mid 200s, right? 240, 250 for the expansion. MSTR, we just talked about it. Micron, this is one that I started after the tariff pause when it was low. We are literally up 150% on this debit spread with tons of time, December 2027. I'll hold, looking for all-time highs. Pepsi has been one that's come back. We've been in the Pepsi one for a while. It's good for September. Pepsi, same concept. Weekly time frame has all the keys, looking for the expansion here. Weekly MACD cross, looking for expansion into resistance. Let's call it 140. Easy trade to consider. PayPal, same concept, 77.5, 82.5 bull call debit spreads for September. We entered this one, I believe, a week or so ago when PayPal was in around here. Okay, we didn't get the exact move into the lows right there, but I took PayPal. If it was one of these, and then it dropped a little bit more. It was either here, right, when it was coming down. It was either here on this move into support or this move here. I forget. I'd have to look at the date. I guess I could find it if you guys really want me to. It's the same trade, right? We're looking for a weekly higher low pattern, and then the expansion with the curling of the MACD. Everything is very obvious on this chart, looking for the monthly higher lows for some expansion. So we're just looking for some expansion into the $80 range, essentially, and that's pretty much that area right there. PayPal, very easy trade, catch-up trade for the rest of the market. UNH has been dead for a while. We tried that one when it was falling. No go. We're down almost 100% on that. I guess I'll harvest it for the taxes. And waste management is a new trade that we took the other day. So you can see I have a good breakdown between value and growth in my short-term trades. Waste management, very easy trade, right? Support, right? Just pull back into support area overall. 5 weeks of downside in a row. It's a very liked stock by institutions overall. We were almost daily oversold yesterday. We took it here, trying to play the shallow end of the range. It went a little bit more yesterday. It tagged the 200 directly, still respecting the support range overall, getting some nice bids today. What we're just looking for here, guys, is we're just looking for trend continuation back into the highs. Everything's looking good. The monthly timeframes also are looking very strong. It's just a monthly back test, looking for expansion. We got a lot of time on those contracts for that thesis to possibly play out or not through October. So that's every single position broken down, more so than I have done now that we have time. That is everything I had for you guys today. So hopefully you guys learned something. Hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every single Monday to Friday after the close. Tomorrow's off. Have fun, guys. Have a beautiful weekend. If you have any questions, anything you want, down below in the comment section. I'm always happy to help you guys out with stocks, options, anything you want, within reason. Of course, I'll help you out in the questions down below there. And in the event that you guys wanted to join a community of traders and investors such as yourselves, a community in which we trade every day and look for the best possible investments for our long-term portfolios as well, you may consider joining our community. In there, you get access to all of my trades in real time, whether it's the wheel trades, the directional trades, the call debit spreads, the put credit spreads, the leap call contracts, the swing trades with shares, the long-term portfolio buys, and everything in between. You get access to all that. These are just a lot of the trades over the past, 1-2 months. Overall, the green check marks are wins. The red little circles are losses overall. You get access to all those trades in real time. You get access to our morning live streams where I trade live for 2 to 3 hours in the mornings. Trade live, answer all your questions of your stocks, your options, your long-term portfolios. If you're not there, they're always recorded. You can also ask me all your questions in our chat rooms throughout the day. I'm very fast to answer. You get access to our educational section as well, where I go through all the trading strategies that I use for all these different strategies, right? Call debit spreads, leaps, everything. Technical analysis video, fundamental analysis video, long-term portfolio structure and building video as well. Whole bunch of education, how to grow small, medium, large portfolios, trading with margin, a whole bunch of different educational videos. There's like 12 of them in there, almost an hour each. You guys know me. I usually give a lot of detail. Our members have been finding tremendous value in there. And also you get access to all my charts, all my watch lists that I use for these option plays, and all of my charts. Whenever you see charts like this with support, resistance ranges, stuff like that, you can copy paste all my watch lists on TradingView, all of my charts as well. It comes with everything you see in 2 clicks of a button, just an added benefit. So if any of that is something that you may enjoy, you might consider joining our community. There is a promotion code for 30% off of your first month for the July 4th holiday. I don't run promotions very often, so if you want to try the community out, now maybe is your chance for a lower price. The promotion code is capital letters July 4. I'll label it down below in the video description. And I mean, don't take it from me, guys. If you want to just look at what some of your peers are saying for the group, we have 26 reviews right now. 5-star rated right now, and you can read everybody's individual review. Trust me, I don't push people to do these reviews. They do it all on their own. So that being said, that's everything I had for you guys today, right? Enjoy, get some rest, relax, and I'll see you guys locked in for a new week. Top 5 options video coming out on Sunday. Take care. That's it for me. Peace.